Imagine creating enough continuous passive income to comfortably meet all your financial needs. Stay tuned as we unravel sustainable dividend income and discover the road to financial independence. Reaching your objective of earning $30,000 yearly, that's $2,500 every month from dividends, is feasible but needs deciding the right amount to invest. Striking the appropriate blend between ambition and pragmatism is crucial. Here are 2 tips. Start gently, especially if you're new to investing. Begin with an amount you're comfortable laying aside without anxiety, just as learning to ride a bike, tackling investing in stages. You may scale up over time through experience and compounding rewards. Consider your goals. Short-term aims may fit conservative investments, while long-term ambitions enable more risk for bigger potential rewards. Aligning investments with goals enables tailored success. Before you dive headfirst into dividend-paying stocks, let's take a moment to assess if this path aligns with your unique aspirations and circumstances. It's not a one-size-fits-all approach, and a healthy dose of reality can pave the way for a more sustainable and fulfilling journey. First things first, let's talk about lifestyle. Picture your ideal retirement. Do you envision globe-trotting adventures or cozy evenings by the fireplace? Are you drawn to bustling city life or serene countryside retreats? Your desired lifestyle significantly impacts the income you'll need to sustain it. Calculate your anticipated monthly expenses, factoring in housing, food, healthcare, transportation, and any hobbies or indulgences. Remember, inflation is a sneaky thief, so add a buffer for rising costs. Now let's crunch some numbers. Divide your desired annual income by the average dividend yield of your target portfolio. A ballpark estimate of 4% is common. This gives you a rough idea of the investment capital needed. But hold your horses. This isn't a magic formula. Consider your risk tolerance. Are you comfortable with some volatility in exchange for potentially higher returns? Or do you prioritize stability and predictable income streams? Even if they're slightly lower, your investment strategy should reflect your risk appetite. Time is another crucial factor. Building a substantial dividend-generating portfolio takes time and discipline. Are you in the early stages of your career with decades to invest and grow your nest egg? Or are you nearing retirement with limited time to accumulate capital? Your investment timeline will influence your choices and the level of risk you can assume. Living off dividends isn't without its potential drawbacks. Companies can cut or suspend dividends, impacting your income stream. The stock market, despite its long-term upward trend, can experience dips and corrections, potentially affecting your portfolio value. Diversification is key to mitigate these risks, but complete immunity isn't guaranteed. Remember, dividends aren't your sole retirement lifeline. Social Security and pension income, if applicable, can provide a vital safety net. Consider these sources as part of your overall financial picture. Living off dividends can be a rewarding path to financial independence, but it's crucial to approach it with clear eyes and realistic expectations. Carefully assess your lifestyle goals, risk tolerance, and investment timeline before taking the plunge. Remember, it's a marathon, not a sprint. With careful planning, discipline, and a touch of luck, dividend investing could become the key to unlocking your dream retirement. This isn't a get-rich-quick scheme, it's a strategic marathon, and choosing the right investments is paramount. Buckle up because we're diving into the exciting world of dividend-yielding assets. Understanding the options. Dividend-paying stocks. The classic choice. Research companies with a solid track record of paying and increasing dividends. Analyze their financial health, payout ratio, that's dividends versus earnings, and industry stability. Remember, a high yield isn't everything. Prioritize sustainability over immediate gratification. Exchange-traded funds or ETFs. Basketfuls of stocks offering instant diversification. Look for dividend-focused ETFs that track specific indices or sectors. They offer lower fees and reduced company-specific risk compared to individual stocks. Research the underlying holdings and expense ratios before investing. Real estate investment trusts or REITs. Own a piece of income-generating real estate without direct management. REITs distribute high dividend yields, but invest cautiously as they're sensitive to interest rates and property markets. Consider diversified REITs across various property types for stability. Diversification is your mantra. Don't put all your eggs in one basket, industry, or asset class. Spread your investments across different sectors, countries, and asset types to mitigate risk and smooth out income fluctuations. Imagine your portfolio as a well-balanced pizza. You wouldn't want just pepperoni, would you? The power of compounding is your secret weapon. Reinvesting your dividends back into the portfolio amplifies your returns over time. It's like planting a seed. Watch it grow exponentially. Consider automatic reinvestment plans to make this process seamless. Remember, patience is key. Let your dividends work their magic over the long term. Don't be afraid to get tactical. Consider dividend growth investing for potentially increasing your income stream over time. Look for companies with a history of raising dividends and the potential for future growth. On the other hand, high-yield investing might be tempting, but tread carefully. These often carry higher risks and may not be sustainable in the long run. Match your strategy to your risk tolerance and income needs. Remember, research is your best friend. Don't blindly follow tips or invest in companies you don't understand. Scrutinize financial statements, read analyst reports, and stay informed about industry trends. The more you know, the better equipped you'll be to make informed decisions and build a resilient portfolio. Building a dividend portfolio is a journey, not a destination. Adapt your strategy as your goals and market conditions evolve. Regularly review your holdings, rebalance when necessary, and stay disciplined. Remember, there are no guarantees, but with careful planning and diversification, you can turn your dividend dreams into a delicious reality. Now go forth and conquer the market, one dividend-paying asset at a time. Navigating the reality of living off dividends. Here's a practical guide. So you've built a dividend portfolio, meticulously researched companies, and meticulously diversified. Now the dream seems within reach, living off a steady stream of passive income, free from the shackles of a traditional paycheck. But before you bask in the sun sipping margaritas, brace yourself for the realities of turning theory into practice. Firstly, taxes become your unwelcome companion. Dividends aren't magical money trees. They're always taxed at the corporate level. Depending on your tax bracket and the type of dividend, that's qualified versus ordinary, you'll face additional taxes. Understanding these implications and planning accordingly is crucial. Consult a tax professional to navigate the specifics and avoid unwelcome surprises later. Secondly, prepare for the rollercoaster ride of income fluctuations. Unlike a steady paycheck, dividends aren't guaranteed. Companies can cut or even suspend them due to economic downturns, industry shifts, or internal restructuring. While diversification mitigates this risk, it doesn't eliminate it. Building a buffer with emergency savings is vital to weather lean months and unexpected expenses. Remember, your needs evolve. Healthcare costs might rise, unexpected repairs might drain your reserves, or you might desire a splurge trip. A rigid withdrawal rate based solely on current income could leave you vulnerable. Consider a flexible approach, adjusting withdrawals based on market conditions, dividend fluctuations, and unforeseen needs. Embrace adaptability as your new mantra. But it's not all doom and gloom. Here's where the magic of compounding shines. Reinvesting your dividends, even partially, can significantly boost your long-term income stream. Imagine your dividends earning dividends, creating a snowball effect that grows exponentially over time. Remember, patience is key. Don't succumb to the temptation of spending every penny received. Technology can be your ally. Utilize online tools and resources to track your portfolio performance. Monitor dividend schedules and research potential tax implications. Stay informed about economic news and industry trends that might impact your investments. Knowledge is power, and in the world of dividends, information is your key to navigating the choppy waters. Lastly, remember you're not alone. Connect with other dividend investors online or through local investment clubs. Share experiences, exchange strategies, and learn from each other's successes and challenges. Building a supportive community can provide invaluable insights and keep you motivated on your journey. Living off dividends is a marathon, not a sprint. It requires careful planning, adaptability, and a healthy dose of realism. But for those who embrace the challenges and navigate the realities, the rewards can be life-changing. Financial independence, time freedom, and the peace of mind that comes with knowing your basic needs are met. So invest wisely and remember the journey itself can be just as enriching as the destination.